Hey everyone, me Kevin here. We've got some breaking news from Joe Biden regarding student loan forgiveness and what's happening now with inflation expectations because we've got a little bit of a problem. But let's start with the good news. First, it looks like, and we don't have all of the details yet, but it looks like borrowers who earn less than $125,000 per year would be eligible for up to $10,000 in student debt forgiveness. And if you have a Pell Grant, there would be a $20,000 limit here. Now, it's believed that this is going to be federally backed student loan debt as opposed to private student loan debt, since after all, this is Joe Biden fulfilling this debt forgiveness. And this package is expected to be announced by Joe Biden later today. However, usually what they do is they pre-announce anything that Joe Biden is going to say. I'm not entirely sure why they do that, but every single day that Joe Biden has to announce something, they just pre-announce everything that he's supposed to read like 3 hours before that. There will also be a freeze on student loan payments for an additional 4 months. The current and sixth extension expires on August 31st. That will be extended to December 31st. That's 4 more months of a debt payments being frozen. And then again, $10,000 of forgiveness for borrowers in student debt with an income cap of $125,000. Again, expecting that since this is a unilateral move by the president, expecting this to be federally backed student debt as opposed to any kind of private student debt. We've got over 46 million Americans with student debt, and more than 92% of that is federal student debt. So there should be a huge benefit to a lot of folks who have federal student debt, and this is great news for them. Unfortunately, the markets are not very happy about this. If you take a look at this particular chart here, this is what's called the 5-year break-even chart of inflation. And what it does is it measures inflation expectations. And what you can see here is as this expectation was coming, that Joe Biden was going to introduce this stimulative measure, which is debt forgiveness, we've actually seen inflation expectations jump. And unfortunately, inflation expectations jumping is not what you want to see if you are a watcher of the Federal Reserve, because it does imply that the Federal Reserve may have to be more restrictive because, on one hand, the Federal Reserve is trying to crimp down inflation. And now, on the other hand, you have Joe Biden doing something that is inflationary. I'm not suggesting that Joe Biden should not support those who have student loan debt. I'm not taking a stance on student loan debt, but I am telling you that markets are not very happy. This is the last 3 days of inflation expectations as we were leading up to this announcement here. And you could see just this morning as the announcement came up, a nice explosion there in break-evens following 2 prior explosions here in the break-even expectation. Again, I want to make it clear why this inflation break-even expectation is so important. This chart basically tells us what inflation is going to do with some degree of confidence within the next 3 to 4 months. So, for example, we just had inflation come down, and that's because in April and May, we actually saw a peak of these inflation expectations. And so when we came off that peak and we were actually trending down quite well, we're like, okay, great. This means inflation is probably going to go down, in 3 to 4 months after that. And sure enough, now we've had our peak, right? We've gone from the 9.1% that we had down to the 8.5. And we kind of expect we might be able to ride this down. If these are the break evens, the numbers don't line up like they don't translate. Like a break-even read of 2.8 doesn't mean inflation will be 2.8, right? But the point is, if we were to line this up, we might be able to say, okay, 9.1 rather, last month was indicative of a peak. Maybe this is 8.5 here. And then maybe we're ready for to drop off a cliff with inflation readings. We could be seeing a 7. We could be seeing a 6.5, maybe even a 5. It really get to these lower levels here. Maybe this is representative of 4.5 over here. But unfortunately, this trend is now breaking, and we're getting this upward trend again in inflation expectations. And it's particularly shooting up because of the Joe Biden debt forgiveness plan, which on one hand, Joe Biden tells us that, no, don't worry, we are not in a recession because the NBER and the individuals responsible for determining whether or not we are in a recession have not yet determined that we are in a recession. That's fine. The NBER usually lags calling an actual recession by 18 months. This is why most people in markets are like, give me 2 quarters of negative GDP and we're in a recession, okay? So on one hand, it's like, okay, well, if you're in a recession, you should be considering stimulative measures, right? Potentially, because that's what China is doing. But then again, if you're in a recession that's induced by combating the greatest inflation that we've had in 40 years, more stimulative measures, more debt forgiveness, more demand from consumers because they have less debt to pay off, less other obligations, means more pressure on supply chains and more pressure on businesses to potentially raise prices, which means more pressure on inflation. See, everything the Federal Reserve is trying to do is tamp down demand and wait for supply to get fixed. They think that supply is about 2/3 of the problem and demand is about the other third of the problem. Well, here, this is another injection into, oh, well, here's more stimulus to kind of keep the inflation going. There's no way that you can look at that and say that debt forgiveness and student loan forgiveness is not inflationary. And this is unfortunately why you're also seeing now the 10-year Treasury yield jump to 3.11%, which is another move here to the upside. Let's look at the 5-day chart here and just see. Yep, there we go. You can see this sort of gap up this morning over here. We'll go to the last day here. The day chart doesn't work too well. Okay, but anyway, we can see this gap up over here on news and rumors that today Joe Biden is announcing this student debt relief. And unfortunately, what 10-year Treasury yields do is they push real estate down. The longer these are above 2.75, which right now they're at 3.11 almost, the longer real estate suffers, the more real estate prices go down. So really what you're doing here is, to some extent, you're forgiving some student loan debt and pausing payments for another month. And so you're benefiting potentially voters who have student debt, which is a populace of somewhere around 40 plus million people, right? It's an interesting way to influence voters leading into the midterms, which come up in, let's see, next month, in 2 months, 3 months? Yeah, 2.5 months. Midterms are in 2.5 months. That's wild. So closer to 11 weeks, actually. That's wild. No, 9 weeks. Anyway, you get my point. Midterms are coming up, and convenient student loan forgiveness right before midterms when you have 40 plus million borrowers who are benefiting from this. On the flip side, what's getting hurt by this is any homeowner and anyone who's affected by higher interest rates, which is kind of ironic because a lot of people have student loans with potentially variable interest rates, as the Federal Reserve may have to be more aggressive now in combating inflation due to this new stimulative measure. So unfortunately, I think this is very ironic that you would get a stimulative measure immediately after Biden essentially boasts over passing the Inflation Reduction Act, which the University of Pennsylvania at Wharton put a study together on and suggested that at best, the Inflation Reduction Act causes no inflation. It would just give you par. So I do sometimes wonder politicians' motivations, because it just doesn't seem to make sense to me that when you have the greatest inflation in 40 years, the Inflation Reduction Act does not reduce inflation. And while the Federal Reserve is like, we need to work together and tamp out demand and we need to reduce inflation, we are now stimulating. Again, I'm happy for everybody who benefits from this. I do want to just acknowledge that for markets, whether that's the stock market or for real estate, this is something that is going to give the Federal Reserve a little bit more ammunition to be aggressive as inflation expectations are going up. And I think inflation so far has been hurting a lot of folks more than student loan debt. But then again, I don't have student loan debt. I've never had student loan debt. So I don't want to sound insensitive to anyone with student loan debt. I'm happy for you. Like, it's going to happen, right? I just want you to also know, like, take that money and now recognize the impacts of what that may also have in the market. Anyway, thank you so much for watching. We'll see you in the next one. Good luck out there.